Nick Lardy, the Peterson Institute, I mean, you really are a specialist in international trade economics. What about that randomness that Stephanie talks about and the fact that the president has not been shy in the past to sort of express his view, including to his own cabinet members, about how he'd like things to come out?
Well, the randomness has always been there to some extent, and I think it'll continue to be there. But I think the key development this morning is the more moderate voices have notched a significant victory by walking the president back from a draconian anti-China specific policy. Now they're going instead a CFIUS policy, which covers all countries. And as Secretary Mnuchin said the other day, what we're going to announce is not going to be specifically directed against China. It's going to be a general policy that will affect transfer of technology to other countries. So I would say this is a victory for the moderate forces and a defeat for Navarro and the more extreme forces.
So, Nick, in a broader sense, give us, as we've heard about this Made in China 2025 initiatives in China, this seems to be very, very important to President Xi. How important to that initiative is the ability of China to invest in U.S. tech companies?
I think it's a relatively small component. It is a component, but they're doing a lot to develop technologies on their own, and they're also doing a lot to license technologies from foreign countries. They're spending about $30 billion a year on licensing foreign technology.
So in the market, the reaction seems to be positive, and I bring it back to Chinese assets, Ian. Yep. The yuan seeing the biggest decline since it devalued in 2015. Yep. A lot of rhetoric was they weaponized it now. Is this a response to it? How do you take that?
You know, I think what we're seeing is the ability of China to be able to cope with this dollar strength is really being questioned. We're seeing the RMB coming down. I think what we're concerned about, and the reason why the market is picking up, is that if you targeted China directly, as Nick Lardy was saying, then that would have been a bit of a red rag to the market. I think broadening this out makes it clearer. But I think what we're seeing here is, and our big worry is that trade wars move to tech wars. And at that point, you actually start to have a very different narrative in the market. If you think about the bit that has been driving these markets forward, then, if you start to undermine confidence in tech, then you have this problem. And with the military digital complex becoming so much more important, the militarization of tech, then you're going to have to see regulation in this space.
And then to piggyback off of that, China and the U.S. have a very large exposure to tech stocks, unlike European equities, for example. So if I try and boil this down to something more simple for market participants, after the bear market that we've seen in Shanghai Comp, do you need to go in and buy on these headlines?
No, we think that you still need to be very cautious. We think global growth is actually decelerating, so there's a big, the big lie out there is there's a synchronized recovery. We've actually had some of the weakest activity surprises since 2012. China is at the heart of that. The lagged effects of monetary tightening a year ago, that's the thing that's driving this here. It's not just about tech wars.